We have some more news on China, gold, and the topic of de-dollarization. I think we could doom it up. We could make an end of the dollar angle. Game over for the West. But nah, I think there's something useful here. We're going to see what we can learn from it. If we're looking for takeaways from China, I'm going to go with silk, because my wife looks good in it, and strategy. And I suppose gunpowder is another, but they really just kind of stumbled into that one. Fireworks are nice, but we're thinking about bigger things here. I've talked a lot about China's Belt and Road Initiative. That's a big one. They're financing projects in more than 150 countries, covering everything from mines to pipelines, roads to railways, airports, seaports, bridges, telecommunications. We're talking about comprehensive infrastructure, and those deals give them huge advantages on the global stage, not just in terms of trade routes, critical resource supply, but also in terms of influence and information and even military advantage. That's not what this video is about, though. This is about another strategic move they're making, an idea that's popular around here, and that's rotating out of the dollar. Before we get back to it, if you're looking for precious metals, hit up SD Bullion. New customers even get gold and silver for spot. It's sdbullion.com/new. We're going to stick to the real effects on this one, on things that we actually hold. We're not going to go too deep into this one because the topic of Chinese diplomacy, of de-dollarization, it just has a way of drifting into weird places. World War III, the death of the dollar, our hard-earned money, it's about to be worthless. All of that. We're all going to be huddling around garbage can fires just to stay warm. Now, all of that's crazy hype. It doesn't do us any good. The dollar's not worthless, but simple diversifications help to de-risk the possible holes in the ship. And I think that that's a simple idea to plan around. Now, we don't have to go too deep on this one because this idea is straightforward and some of it has an actual impact on gold price. We're going to stick to that. Now, China's central bank is aggressively buying gold. Maybe we thought we already knew that, but we have new data saying they've continued the buying spree for 10 months now. I saw a quote in a Kitco article calling it a scramble away from the dollar. You can call it whatever you'd like, but the central bank for the second largest economy in the world is trying to prop up its balance sheet with a stable asset, a non-US dollar stable asset. And they're using gold because really there aren't a lot of options outside the dollar. And we aren't talking about a little bit of gold here. The People's Bank of China has purchased 155 tons of it this year alone. Now, I think I mentioned in the beginning that there's something interesting in that, and it's interesting beyond the popular chant of the death of the dollar. It's that China is long on gold, and steady gold demand means gold prices stay higher longer. And this data, it's only focused on one central bank, but we already know there are a lot of central banks doing the same, particularly in the bloc of nations with similar gripes about the US dollar and US diplomacy. So holding gold has less risk than we might have seen in 2011 and 2012 because of what these central banks are doing. And if that seems like a jump comparing 2023 to 2012, well, it should, because gold lost 28% of its price in 2013, but it comes up a lot. I'll just say that there are a lot of different conditions today than there were then, but that idea that an extra boost to gold price, like we've seen coming off of 2020 events, that kind of boost might lose its steam, well, that's a valid idea. And this is why people feel that gold price is high right now. I think it's high. But I think it's going to go higher because, to steal a word that we haven't heard in a while, the cost increases we've seen over the past 2 years have become entrenched. Even if inflation comes back to the Fed's 2% target rate, that is on top of the 4% that's on top of the 9%, and that's just what's being reported. Everything costs more, including gold. So the basic angle here is that the biggest impact on gold price would be investors rolling out of the dollar, out of treasury bonds, and into gold. And that comes from countries like China looking for something stable other than the dollar. We're seeing that. And it comes from actual investors who aren't seeing the yields that they're seeing today. Those yields are driven by the hikes to the Fed funds rate. And anytime we get word that the rate hikes are going to be ending, the price of gold goes up. When we get word of a rate reversal sometime in the near future, they're going to go up more. And when it actually happens, we're going to see two things. the yields on treasury products are actually going to fall. No more forecasting, the easy money will dry up. And then second, the dollar loses its advantage over other currencies. That makes gold cheaper for investors in other countries, and the price of gold is going to go higher again. Makes sense anyway. I'm just a layman here. These are just observations, but all that is pretty straightforward. The only thing that could prevent a further run on gold price that I can see is a wide-scale drop in demand. And if you have central banks buying or even simply holding gold like they've been doing, things look pretty good for gold. We're not going to see that demand drop. Now, I wasn't holding my breath here. I wasn't on the fence waiting to sell anything off. But if I thought we were looking at something more like 2012 with that coming drop into 2013, I'd at least consider moving out of some part of my gold holdings. It just makes sense. I'd roll it into property or something like that. Now, I'm also looking for a good time to consolidate some of the gold that I have. Sell off some random stuff, sell off some collectible pieces, and convert it into eagles and buffaloes. I know that's not exciting, but I'd like to do it, and it requires a certain price environment. If the bottom falls out of the price of gold, it's a little bit harder to move some of those choices I have. I want to do it before that. But as it stands, I think it's just important to pay attention to some of the root information out there, like what central banks are purchasing, without getting caught up in the weird doom angle. The doom angle just tells you that prices are going to skyrocket, and it becomes something like the little boy crying wolf. So there are three things going on here. The central banks are buying gold, they're rolling more assets into it. That's keeping prices relatively high. Now, what's high? I've mentioned 1850. That's just a gut number for me. Anything above that feels high, but we're not really that far above it, so nothing crazy. The second is what the individual and institutional investors are up to. Investors are not doing much with gold right now, and I think that changes when the rates get cut for the reasons I mentioned earlier, and that is coming. That's the second thing. The third is that nobody is selling gold right now. I go back to 1999 when Britain sold half its gold reserves. That played a part in the dip in gold prices that began in 2000. Now, if you look at the charts, we all know how bad of a move that was, but I guess hindsight's 2020 and all that. The point is not to point and laugh at Britain. It's just to say that we need to pay attention to all the angles because central bank buying behavior is relevant and so is the selling behavior. So if we want to sum all that up again from an observer's perspective, we're looking at central banks pouring into gold. We're looking at investors waiting for their wave and nobody really moving out of it. So prices are strong. And even if we were to see short-term pullbacks, well, there isn't really much that would trigger a big sell-off. I like to think that there's a point we can all get a discount to buy more, buy those dips, but for my personal planning, I still think a spike is ahead of us, and that's a spike that I'll be cautious of buying into. I'd rather be ahead of it. And I'll also be ready to sell some of my weird stuff when the retail crowd gets excited about gold again. We know how that works. When the price of gold goes up, everyone wants in, that excitement leads to more excitement, and you have a buying frenzy. Prices get stupid. And that's when you want to put the weird stuff up for sale. So let's call it good there. Let us know what you're up to. Is there a price target you're working around? You have plans to buy, plans to sell? Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.